The world watched in disbelief as President Trump declared a new era of trade wars. His weapon of choice? Tariffs. These taxes on imported goods were designed to protect American businesses. However, they sent shockwaves through the global economy, causing uncertainty and fear among investors. Trump's initial tariffs were substantial, starting at 10% on goods from most countries. But China, America's biggest trading partner, became a primary target. Tariffs on Chinese goods began at a staggering 50%, quickly escalating to 104%, affecting a wide range of products. The message was clear. Trump was prepared to upend decades of global trade norms to achieve his goals. These actions were met with immediate condemnation from economists and world leaders. Many argued that these tariffs would harm American consumers and businesses. They warned of rising prices and potential shortages of essential goods, which could impact everyday life. Despite the outcry, Trump remained resolute. He believed these tariffs were necessary to protect American jobs and intellectual property. He insisted that China had been taking advantage of the U.S. for too long, exploiting trade imbalances. He vowed to fight back, no matter the cost, determined to reshape the global trade landscape. The world braced itself for a trade war the likes of which it had never seen, uncertain of what the future would hold. China wasted no time in responding to Trump's aggressive tariffs. The Chinese government viewed these tariffs as an attack on their economy and a threat to their growing global influence. In a calculated move, China imposed retaliatory tariffs on a range of American goods. These tariffs, ranging from 34% to a staggering 84%, were strategically targeted at key American industries. The impact was swift and significant. American farmers who relied heavily on exports to China were hit particularly hard. Shipments of soybeans, pork, and other agricultural products plummeted. Manufacturing industries also felt the pain as demand for American-made goods in China dwindled. The trade war was no longer a distant threat, it was a harsh reality with tangible consequences. American businesses and consumers were caught in the crossfire. The economic pain was real, and the political tensions between the two superpowers continued to escalate. The trade war between the United States and China sent shockwaves through global markets, causing widespread concern among investors and financial analysts alike. Investors, worried about the impact on global growth, pulled back from stocks, leading to a significant sell-off in major indices. The S&P 500, a key indicator of the American stock market, plunged nearly 20% from its peak, entering a bear market, which is defined as a decline of 20% or more. The damage wasn't limited to the United States, it spread rapidly across the globe. Stock markets around the world felt the pressure, with many experiencing their worst performances in years. South Korea's Kospi Index and stocks in Shanghai and Hong Kong all experienced significant declines, reflecting the widespread anxiety. The interconnected nature of the global economy meant that no country was immune to the fallout from the trade war, amplifying the economic uncertainty. Fears of a global recession began to mount, as businesses and consumers alike grew increasingly cautious. Goldman Sachs, a leading investment bank, raised the probability of a U.S. recession within the year to 45%, a stark warning to the markets. The International Monetary Fund, also known as the IMF, downgraded its global growth forecast, citing trade tensions as a primary concern and urging countries to resolve their differences. The uncertainty surrounding the trade war created a climate of fear and volatility in the markets, making it difficult for investors to predict future trends. Businesses delayed investments, consumers cut back on spending, and the global economy braced for a potential downturn, with many fearing the worst was yet to come. Section 4. The BRICS Nation Standoff. As the trade war with China raged on, President Trump set his sights on a new target, the BRICS nations. This group of emerging economies, Brazil, Russia, India, China, and South Africa, had become increasingly influential on the world stage. Trump, through his preferred platform of Truth Social, issued a stark warning to these nations. He threatened to impose a 100% tariff on their goods if they took any steps to abandon the US dollar as the world's reserve currency. This threat was seen by many as an attempt to stifle the growing economic power of the BRICS nations. These countries had been exploring alternatives to the US dollar in international trade and finance. Trump's message was clear. Any challenge to the dominance of the US dollar would be met with swift and severe economic retaliation. Section 5. Mexico and Canada in the crosshairs. President Trump's appetite for tariffs extended beyond China and the BRICS nations. He also targeted key allies, Mexico and Canada, with new trade barriers. Citing concerns over illegal immigration and drug trafficking, Trump announced a 25% tariff on goods from Mexico and an additional 10% on goods from Canada. These tariffs, coming on the heels of the renegotiation of the North American Free Trade Agreement, strained relations between the United States and its North American neighbors. Canada and Mexico vowed to retaliate with tariffs of their own, targeting key American industries. The tariffs on Mexico and Canada threatened to disrupt integrated supply chains that had been built up over decades under NAFTA. Businesses in all three countries faced uncertainty and rising costs, while consumers braced for higher prices on a range of goods. Section 6. A House divided. President Trump's aggressive tariff policies divided the United States. While some praised his tough stance on trade, arguing that it was necessary to protect American jobs and interests, others voiced deep concerns about the economic and political consequences of his actions. Prominent figures in the business world, including Bill Ackman and Jamie Dimon, urged caution and warned of the potential for a devastating trade war. Economists pointed to the risks of higher prices for consumers, job losses in export-dependent industries, and a slowdown in economic growth. Despite these warnings, Trump remained defiant, insisting that his tariffs were working and that other countries would eventually back down. He framed the trade war as a battle for American economic dominance, a battle he was determined to win, regardless of the cost. Section 7. The uncertain future of global trade. As the trade war raged on, the future of global trade hung in the balance. The conflict between major economies created a ripple effect that was felt across the world. The rules-based system that had governed international commerce for decades was under threat. Long-standing agreements were questioned, and new tariffs were imposed. The World Trade Organization, the body tasked with mediating trade disputes, struggled to maintain its relevance in the face of rising protectionism. Its ability to enforce rules was increasingly challenged. The trade war left a trail of economic damage in its wake. Industries that once thrived were now facing closures and layoffs. Businesses in the United States and around the world faced higher costs, disrupted supply chains, and lost markets. The uncertainty made it difficult for companies to plan for the future. Consumers felt the pinch of rising prices and a decline in purchasing power. Everyday goods became more expensive, affecting household budgets. The long-term consequences of President Trump's trade policies remain to be seen. Farmers and manufacturers alike are waiting to see how new trade deals will unfold. However, one thing is clear. The global trade landscape has been irrevocably altered. The shifts in policy and practice have created a new normal. The world is now navigating a new era of uncertainty, where economic nationalism and protectionism are on the rise. The impact on international relations is profound, the stakes are high, and the outcome will shape the global economy for years to come. The decisions made today will determine the future of trade and economic stability.